to U.S. Bank Business Watch. I'm Peg Rasconi. New federal tax rules have primed thousands of neighborhoods for a wave of investment. On the Business Courier front page centerpiece this week, Greater Cincinnati's opportunity knocks. Will a rising tide lift all boats, or will our poorest, least educated communities be upended in the name of economic development? Last year, Congress approved new rules encouraging investment in thousands of America's most underdeveloped neighborhoods known as opportunity zones. There are 40 designated opportunity zones in Southwest Ohio, including the West End, where the new FC Cincinnati soccer stadium is being built. Each zone has varying degrees of need and potential for economic development. Some economists and policymakers caution the law's language is ripe to be exploited outside the spirit of the Opportunity Zone program's intent. Concerns include gentrification and displacement of poor minority neighborhoods in the name of economic development. And the clock is ticking. Investors have only a few more months to maximize the program's benefits, estimated in the billions. This week's print edition includes a special report on opportunity zones nationally, as well as reporting from Business Courier reporter Chris Wetterick on the local situation. He's in the studio this morning with Regan Schmidt, an attorney in Taft's Cincinnati office, to talk more about opportunity zones and their local impact. Chris and Regan.
Thanks, Peg. Regan, thanks for being with us today.
Yeah.
Can you tell me a little bit more about the tax benefits an investor can get if they put their money into an opportunity zone project?
Sure. So what we've been hearing about and what the IRS has put forth in the proposed legislation is basically that for capital gains invested in an opportunity zone fund, those capital gains will be deferred from a taxation perspective. And then any gains on top of that initial investment will be tax-free at the end of 10 years.
Great. And, what kind of projects or businesses are you seeing your clients take a look at investing in? What are they interested in?
Yeah, so the Opportunity Zone regulation basically covers businesses as well as investments in property. What I've generally seen clients discussing and asking about is the property investment. I think as time goes along, we might see more of the business aspect, but usually it's purchase of real estate and then mixed-use properties, so retail, condo, and that kind of investment so far.
What's the timeline look like for having to act on this?
So to get the most benefit of bang for your buck, I would say, you want to invest by the end of 2019, and so it's going to be capital gains. So the type of investors you're probably going to be seeing are high net worth individuals, so people who have sold stock or even property, because it's been pretty liberal in the type of capital gains that you can recover.
So these aren't really traditional real estate people. They're people that are coming in that might not have invested in that before, maybe.
I think it's both. I think you're going to see both. I think as you see individual investors come in, they might be investing in a fund that's accumulating multiple investors, but you'll also see real estate development investors and people who are already opening businesses in these areas that are wanting to look at, from a taxation perspective, what kind of benefit I can get from a deal that's already going to come into play.
Talk about the kind of communities that we're talking about, where these opportunity zones are located. What's the characteristics of them?
So there are 320 opportunity zones in Ohio, and the purpose of the legislation is to invest capital in historically distressed neighborhoods. So it is based on the last census. So over time, things have changed. OTR comprises a large portion of an opportunity zone, and that's already a hot pocket for development in this area. But there's also areas outside, in Loveland and other surrounding communities within Ohio.
And how do you think the communities themselves are going to benefit from this?
Yeah, I think that's the big question that remains to be seen. I mean, there's lots of talk about negative impact on communities that I think as task force come into play, and some states are starting to develop those, that they'll be proactive in addressing that sort of thing. But again, the purpose is to invest capital, and hopefully we'll have a really positive impact in increasing the value of that area.
Well, thanks again for being with us.